I make $15,000 per month trading just this one simple pattern. Since then, I've gotten funded over $900,000, all from trading this simple pattern that I'm about to show you. Initially, I was a little bit reluctant to share it with you guys just based on how simple it actually is. But I decided, why the hell not? By the end of this video, you'll be able to spot this pattern easily. You'll know how to trade this pattern even if you work a 9-to-5 job. I'll also be equipping you with all of the tools you need to backtest this and then become confident trading this edge. I promise you, if you put in the effort and spend the time behind the charts testing this, you might actually pass your first prop firm challenge and even become profitable consistently. Now, this first concept is often talked about extremely vaguely, and very few people know how to trade it and profit off of it correctly. And I promise you, if you master this one concept, it's impossible for you not to be a profitable trader at the end of the day. Now, ICT dubbed liquidity as one of the most important parts of the ICT strategy. But do you actually know how to spot it correctly? The key to spotting the most important liquidity zones can be summed up in exactly one sentence. And that is, get inside the heads of retail traders. We simply want to identify where retail traders are getting into the market. We can then get into the market ourselves when their positions have been swept out, giving us fuel for our positions to move. And don't get it wrong, this is key to trading the pattern that I'm about to reveal to you. Skip this part and everything else doesn't make sense. But if you master it, you're well on your way to being a consistent trader. All right, so when it comes to liquidity, the most important thing is to put your brain into the shoes, put yourself in the shoes of a retail trader, okay? We are trying to trade institutionally, therefore we need to think like a retail trader and do the opposite of them. And so we need to find out when a retail trader is convinced to either buy or sell. And then we wait for them and their positions to get liquidated and we hop in after that. That is the whole concept of liquidity. And so we're going to look at a few examples here of liquidity, and I'm going to show you why or why not they are valid zones of liquidity. So if we have a look at this first example over here, all right, we've got this. Now, if you're looking at this and feeling confused, then I don't blame you because it's a mess. Okay, there are a few points of liquidity within here. So for example, we've got price moving and pulling back quite clearly-ish here, but you can see there's a weird gap here and it just literally chops, okay? This is probably the only kind of structure that I can see within this, perhaps over here. But in general, this here is terribly it's a consolidation that is extremely messy and choppy. Okay, and then if we compare that to something like this, okay, once again, also consolidatory, okay, we've got a lot of consolidation, but we still have a pullback that's quite clear over here. This over here is quite messy, okay, but we've got this piece of structure and information that's quite clear over here, okay? And so for me, I would be happy, okay? So this is kind of like not A, maybe B type setup of liquidity. Okay, so there is clear liquidity sitting over here, okay? There's clear liquidity sitting here, but price does become quite choppy up here. So we can classify this as liquidity, and if price sweeps it, we can effectively say that that liquidity has been breached, and essentially the market can use that as fuel, all right? Now, if we look at a more clear example of liquidity, we can see over here, the market moved up like crazy over here, okay, which is clear liquidity as well would be resting below this low, okay, because that's where all of the market makers injected their volume into the market. We then have a little bit of a chop over here, okay? Again, you can basically just like block this out. You shouldn't even be seeing this. We then have a very clear push and then a retracement with a clear recovery over here. Now, again, that is structure, Okay, so below this, there is a clear structure point, okay? And so that, for me, is very clear liquidity. We then also have liquidity above here because we then continued on here to then take out the highs, okay? When you take out a high, the lows below it are quite strong. Why? Because people over here are looking for breaks and retests of the zone. So when price comes up, they're waiting for price to continue like so, okay? Then they get in, their stop loss gets taken out, okay? And then they try to get in once again over here, and their stop loss gets taken out again. And that is how we find valid liquidity zones in the market. Make sure that you go over this because later on in the video, it's going to be very important to putting all of the steps together to actually trading this as a trade system. Now that you know what fuels the market and its movements, and more importantly, how to identify it, I'm going to reveal the one pattern that I trade over and over to make $15,000 a month. Now, many of you in the comments will call me a liar, but all of the students within the community tested years of data and all yielded similar results, which equaled on average a 70% strike rate. I'll post the results on screen and you can have a look for yourself. All similar. I'm going to show you how to spot this pattern, but more importantly, how to actually trade it. I'm also going to be showing you how it works so well for those of you who have a 9-to-5 job. We do not need to be glued to our screen 24/7 to be a profitable trader. So let me show you the pattern. So the first thing we need to do is identify the trend. We need to identify the trend on two different time frames. And in my case, it's the 4-hour and the 15-minute. That's what I found works best for me. As you can see in this diagram, price is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. All right. And this more faint line here is the 15-minute time frame, and this thick line is the 4-hour time frame. Okay. Now, as you can see here, I've marked out the swing highs and swing lows. So simply the swing high is classified when we have a break of structure like so, okay? When we have a break of structure and then we pull back. When we pull back, a swing high is created. The swing low is created once we break structure and then look to the lowest point before structure was broken. So here's the structure broken. So the previous swing high was taken out here, and simply the next point at which a low was created becomes the swing low. Okay, that's how I identify swing highs and swing lows in the market. And these areas between the swing highs and swing lows are ranges. Okay, so here's a range, and here's a range. Okay, now what I'm looking for in the market is for two of these breaks or ranges to occur. So here's one and here's another. Once we have two in a row, I am then classifying that as a bullish trend on that time frame. It's that simple. Okay, so we've got one here, another here, okay, and we've just pulled back and then broken as well, creating a third one here. So on this 4-hour time frame, I am bullish. Now we want the 15-minute to line up with that. So what do we have on the 15-minute? So I like to mark up the 15-minute with blue and red rectangles. The same concept, except I'm just using a rectangle to draw between the swing highs and swing lows. So if we mark out the swing highs and swing lows here, we've got this high here that was taken out over here. Okay, so this was taken out. The lowest point is over here. Okay, we then retrace, okay, creating this swing high. And we've got the swing low because when we broke structure, this was the lowest point. We then create another swing low right here and so on. Okay, and that is how I then identify the same structure, but on the lower time frame, which in this case is the 15-minute. So as we can see, price took out the low here, which I will annotate with a red box. Okay, so that is a bearish range. Okay, we then went up to take out that high over here. Okay, we took out that high and then created a bullish range right here. Okay, then we created another bullish range. We retraced, took out the high, and then retraced again, creating another bullish range right here. So what do we have? We've got 1, 2 bullish ranges. We've also got 1, 2, okay, breaks of structure or bullish ranges here. So I am bullish on the 4-hour as well as bullish on the 15-minute over here, okay? So essentially these two time frames are now lining up. And so we can hypothesize that there could be something that happens soon that allows us to take a very high probability entry and allows us to enter the market taking out these highs at the very least. Okay, and that is what the strategy and pattern is all about. And the last thing I'm about to share with you turns this simple candlestick pattern into an actual strategy, so pay attention. So let's put everything together over here. Now, the main thing as well, when it comes to trading this pattern, is not just trading it out of session in a random time. And so the last key is having the market session in the right place. And I use this FX market session indicator over here. I will have a look for it over here just so you guys can see. It's this one over here, okay? So I use that and I use these times over here. I'm giving you the times right now. 8 to 10 GMT and 1 to 3 GMT. Let's put that on the chart real quick. You'll be able to see it on the 15-minute. So if I go down to the 15-minute, here are those time periods. You can see they are highlighted by these boxes. And this is all I'm trading, right? These candles within these boxes, okay? That's all I'm trading. So then, if we go back to the 4-hour, let's identify our trend on the 4-hour. So simply, as you can see, I've already started off here with drawing the ranges. So we've got this swing here. Let me highlight it for you. We've got the market swinging, continuing lower here, taking out structure once. So we've got a bearish range right here, okay? Then we take that bearish range out over here, okay? Leaving behind this swing low. Okay, we then retrace again and take out that low, okay, that high here, okay, once again leaving behind another swing low, which I will add in over here. Okay, so the market right now is ranging over here, okay, and so we've just started to pull back over here, and so we can mark this as a swing high. And so what we can hypothesize is that the market is going to do this, have a manipulation potentially, and then continue up. Now I'm going to reveal the entry criteria to the pattern and how you can utilize this in a practical trading environment, okay? So what you're gonna wanna do, again, is go down to the 15-minute and do what we just spoke about, identify the 15-minute trend. We can now already, straight by looking at this, again, identify that we are bullish. How do we know that? We've had 2 breaks of structure to the upside. We've had one here and we've had one here, okay? So we are bullish because we've had 2 bullish ranges, okay? Then we hop onto the 15-minute time frame, okay? And then we're going to identify what price has done most recently. So as you can see here, this big push here that took out structure is one big bullish range. And everything within inside of it, as you can see, nothing has taken out the high or the low of this. And so we cannot say that there are any other swing points at this point. This is all one big range. If we look prior to that, we can see that the most recent bearish range was right here on the 15-minute, okay? Why? Because you can see that price clearly swung down, pulled back, came down, took out that high, then retraced and came up again, okay? So we've got a bearish range over here. Let me mark that by a red box. We took that bearish range out concurrently, okay? Let me get rid of the sessions really quickly just so you can see a bit more clearly. Here's our bullish range that took that out. And we confirm that we are now bullish by having another break of that bullish range right here, okay? And then we continue the ranges up like so, okay? Until eventually price just breaks out. So as you can see, we've got a succession of bullish ranges, 1, 2, 3, 4, then one big one. So as you can see, we are very clearly bullish on the 15-minute, okay? Now, what are we looking for? We're looking for a manipulation, all right? And the manipulation is going to occur. And this is where it comes back to what I mentioned in the beginning, liquidity. Liquidity is key to the entry in this, as we are going to look for a liquidity zone on the 15-minute to then trigger our entry. So what we're looking for essentially is a liquidity zone that falls within session that gets swept. All right, so let's have a look. The previous day, you can see within session, we had price come down and take out this low over here. Okay, but as you can see, price is extremely messy here. Like there's no real clear structure, and that's what we spoke about. Does this look familiar to you? Because this is what we looked at in the beginning. Price is very messy here. We could have taken this, entered at the top of this, and taken it all the way up, okay? But I would not do that in my live trading, so I left it out, even though this would have worked out, okay? We're looking for clear swing structure points that we can use as liquidity, okay? People aren't necessarily gonna be that convinced to go long here. So let's have a look at what happens on the next day. Remember, we're still within this big 15-minute range here. Whoops, I went a bit too far there. We're still within this big 15-minute range, so we are still bullish. We have not taken out the lows or the highs just yet. So what do we have here? We've got this very defined low right here. If you look at this here compared to this mess over here, you can see that clearly there's much more structure underneath this low, okay? We've got all of this liquidity sitting right underneath here, okay? So I would be comfortable to go long if we sweep that, because we are bullish on the 15-minute, we are bullish on the 4-hour, and we are looking for that low to be swept. We then sweep it quite aggressively, and immediately after, we have a bullish candle right here, okay? This is the entry model. We look for the sweep, and we look for a bullish or a retracement candle. So if it is bearish, okay, we would look for a sweep to the upside, and then, so if it's bearish, for example, we would then look for price to take liquidity here and retrace. We would then enter on that retracement and continue downward. Now on the S&P 500, what I backtested is having a minimum of 10 points stop loss. So I would enter like so, okay? I would then have a 10 points at the very least, so 10 here, okay, as a stop loss. Always, it can be more than 10, but never less than 10. And that's what I backtested. Make sure you guys backtest and find out what works best for you and your psychology. This is what works best for me. And I'm gonna aim for a 1 to 2. You can aim for 1 to 3s, but the reason I'm aiming for a 1 to 2 is because this is the highs, okay? And we just get a 1 to 2 here. We might have to go a bit past the highs, okay? If we had a lot more room, I would be tempted to then shoot for a 1 to 3. So that is how I determine my risk reward ratio. And so here the trade plays out. We do come down, a sweep again, and continue upward, okay? And price just rockets off to the upside. We could have targeted a 1 to 3 again, but like I said, I'm gonna test this as if we are live, okay? So I will stick to a 1 to 2 because I know that the high is right there, okay? If we had more room and the high was up here, then I would target more. So let's continue on to the next day's price, and I'll show you another entry real quick. So as you can see, we've now taken out the top of this 15-minute range, okay, as well as the top of the 4-hour range. So we're continuing our bullish range right here. So I'm gonna mark out my 15-minute range, whoops, with a blue square, okay. like so. So that's our new bullish range. Let's go on to the next day's session. So there is a little liquidity being built here. Okay, so as session opens, we have a sweep of the lows right here. So this is an internal low, so it's not as good as the liquidity, for example, resting below here, okay? But there is still a defined low within here, okay? It's not completely bad, okay? There is actual structure here. It's not just a noisy mess like I showed you previously over here. Okay, this is a noisy mess. You can see the difference between this and this, all right? So this is the clear low right here. We've also got this low right here, which our stop loss will cover, all right? Whoops. So we've also got this low right here, which is also covered by our stop loss. So I'm now looking for a retracement, okay, after this sweep. So we had our sweep right here. Okay, I'm now looking for a retracement candle that says that we are switching bullish. We've had that right here. Okay, so I'm now going to enter, and I put my entry at the top of the range, and I just set a stop order. All right, the stop order means that I'm only triggered in if price goes past that point. If price continues lower, I won't be triggered, okay? And I simply trail my entry. So if price had to continue lower, like here, okay, I would then move my entry down lower, okay? That's how I do it. So if price continues lower, continues to break the lows, I would then trail my entry down, okay? And that's how I allow what we call an extended sweep within the community, okay? So I'm then entering here with a 10 pip stop. And then we're targeting a 1 to 2 at the very minimum. Okay. Let's see how that played out. So we would have had to hold it through New York and into the evening, but we did eventually hit hit take profit at the end right here for a full 1 to 2. And again, you can see how price took out these lows and then continued up. It just looked for that liquidity and carried on going. So that is it, guys. That is the entry model. So for those of you who are struggling to be profitable right now, I've created a Discord group where you can follow me trading live every day, and it's completely free to join. The link is in the Discord down below. I'll see you in the Discord trading live every day for New York Open. Thanks to everybody for watching. I'll see you in the next one.